The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
Good afternoon. It's Wednesday, October 3rd, a non-beautiful day at the center of trading and investing, TFNN.com. I brought the submarine to work today across the causeway. Big, heavy showers out there today. Beautiful weather if you're a duck, but I am not a duck, and unfortunately the submarine was in for repairs. So I had to take the actual four-tired vehicle here and stop many times with a very, very heavy rain. You cannot see. Of course, everybody's in a big hurry. Everybody else has got their mom going to the hospital for a heart operation. Of course, we know that's not true, but they all drive like they do. I think a lot of these people, especially when the weather gets worse, they all think they're NASCAR drivers for some reason. All got to go about 100 mile an hour, hydroplane, plow into things. Just lucky to make it here alive and untouched for another wonderful edition of the Power Trading Hour. Today we celebrate balloons around the world today, where balloon artists around the world will be taking part in an event designed to highlight the act of giving to deliver thousands of smiles and showcase the art of balloon twisting and decorating. The only thing I have is isn't this getting awful close to clown territory? I mean, hanging around kids and stuff, a little creepy if you ask me. I like balloon animals, but I don't know. Since you can't be a clown anymore and not be a pedophile, I'm wondering if this isn't the new business that they've kind of wandered into. That's balloon animals. Just a random thought, but I don't know. Now I've got to worry about it. I didn't think about that before today, but I don't know. It used to be, I guess, you had the clowns come for the birthday party and everything. I've noticed now that the big thing around my area is these people bring in these like small Shetland kind of ponies, and the people kind of ride them around the neighborhood when they bring all the kids over for their birthday. Not too bad. And of course, not a lot of people that act too unfortunately, we're having more comments from the peanut gallery today in our instant messaging between the control room and the actual studio. But anyway, balloon animals, I don't know. Maybe someone can tell me I've got to worry about those guys. I've got to worry about everybody. Anyway, what else is going on in the world today? LifeLock went and had its IPO today. It priced at the very low end. Always a warning, especially when these guys decide to shove it out anyway. Let's see if I got a current reading on it now. Came out at $9, went to a high of $9.04, trading $8.73, not too bad. I suspect we're probably going to see this one trade back down to the $5 level fairly quickly. Everybody's, I think, has probably heard the LifeLock, which basically looks at your credit reports every day, checks out to see if anybody's tried to open up a new report in your name or change transfer a lot of money. I guess it's an interesting company. I wonder, if we're always going to have these problems, or if the companies themselves are going to get it together and start really protecting us. So far, they haven't. So, but I think there's a great deal that will change here shortly. 15.7 million shares offered at $9, and it did go out at $9. But trading down, and we noticed what happened when things traded down with our good friend, the Facebook. Anyway, what else do we have going on out here? Kraft, we had another flash crash. We talked yesterday about the actual CNBC having a whole hour devoted to high-frequency traders and the inconsistencies in the markets. Kraft, if I'm not KRFT, let's bring that up just so I can bring a current quote. See if they still KFRT. Of course, it's split, and they're actually putting no sense. KRFT, if I can type correctly. There we go. Let's see what they have. No, they've changed it down, but I suspect that any trade above, I think it was 47.80, got canceled this morning. This was another one where they've split, and because of that split, it caused some problems with software. I can't remember if it was 75 or 80 bucks was the high, and it all happened within about 15 seconds this morning. Not too much after the open. You just continue to think, is all this high-frequency trading any good for the rest of the market and the long term of the market? Because, of course, only a handful of people can participate in it. They actually had the guy from Nanex that's been on this show before, Eric Hunsaker, and Hunsaker, I think is his name. Kind of interesting what he had to say. He said there's no way you can prove it, but a lot of times it's these, how can I say it, it's one or two people will get involved, and one high-frequency trader will, their software will kind of play off the other one and cause basically a rolling auction. In this case, almost up to 80 bucks if you believe some tickers, but everything canceled above 48. And the sad part of this is that it happens almost every day now. There's at least one or two stocks where some of this blows up. The idea from Eric Hunsaker from Nanex is that if you know these trades are far out and they blow through what circuit breakers should be, why do you allow the trades to begin at all? And he answered his own question today in that, of course, the market doesn't want to slow down trades. They make at least some money every time something trades, and they're more than willing to make sure that everything goes along until one day, it's like they say about slingshots. It's all fun and games until someone loses an eye. We've lost a couple of eyes from the flash crash, the Facebook debacle, and just have to wait and see whether or not it's still any kind of problems. Anyway, you can always give me a call at 877-927-6648, 877-927-6648, and we can find out what you would like to talk about. We've got more news out there. California PMI came in. This one kind of way under the radar, but basically what we have is there's a California PMI, basically a manufacturing index, and you find that almost all the business that is being done down in California is hugely happening in the Silicon Valley area. The rest of it has just become really poor. Just like regular PMIs, anything above 50 is growing. And so they had about 4 months this summer, and the high of 60.8 in March, above the 50. So everybody thought it was actually hugely growing. Well, September numbers came out, I think it was late yesterday, and it crashed down to 43.4. So why California's had a little spurt, they have popped back down, and of course home to a huge percentage of the American populace that they've had such a huge problem in their manufacturing, especially when you look at what is counted, which is real manufacturing, not some kind of software business that employs 1,000 people, but a lot of businesses that employ millions of people in manufacturing. Part of that problem is they have a lot of manufacturers of defense workers, and a lot of that's been shut off, and it probably just hit. We'll probably see this, maybe not in this employment report, but the employment report after this one. But be aware, I already suspect there was another hamlet in California applying for bankruptcy protection. For the moment, they said that all they're going to do is pay the interest on the loan and continue to pay at least part of it or some of it. But there's 3 or 4 more looking to go bankrupt for cities around California. Probably going to be a huge problem next year, as I suspect Nothing's been done to curb the spending in California, so I'd say there's probably 80% chance they go bankrupt in the first 3-4 months of next year. Anyway, what else is going out there? I've been Einhorn. Apparently, I'm now a verb. Einhorn jokingly told audience at the Value Investing Congress yesterday, showing a slide of a news story with the word Einhorn. And of course, yesterday he dissed Chipotle Mexican Grill, and they got hammered down almost to $300. Let's see if I looked at them this morning. Nope, something went wrong here. Horribly wrong. Let's see, maybe. Oh, okay. Didn't know this thing worked with the mouse. Anyway, what else do you have here? Did I look at it yesterday? Maybe I took it off my list. CMG, may have. We'll take a quick look at here at CMG, see how it's doing today. It was down around $300. 301, still off another $2 today. So we'll see it. But Monday when I talked about this investing conference and said there were two people that could move the market, Einhorn was one of them. Well, he did come out yesterday and say it. But now we have a new verb in the trading lexicon, and that's been I've been Einhorned. I'm on one of the stocks that he actually peripherally liked in an industry, and I'll have to watch and see how that closes today. But I'm awful close to my stop. But just his mention right now as kind of the fair-haired golden boy of Wall Street is enough to move the markets. Been a long time since someone like a individual investor or individual hedge fund manager could really move the markets. But his success on things like Green Mountain Coffee Roasters and a few others has really made him now probably the one axe in the market. Got about a minute or something. Again, you can give me a call at 877-927-6648. It seems like we've got, I think, too few problems in America. And what I've noticed here lately, I know a lot of people listen outside of the Florida area, but you would think that all the kids at all the schools were molested yesterday, that the serial murders all happened on one day and 1,000 people got killed. But what really happened down here? A kind of a drunk Spanish gal or Latin American gal got on the back of a manatee. And now that's all you hear about. I would say 3/4 of the local news here was about this gal that touched a manatee. I could almost see it if maybe something like the manatee was hurt or anything else. But you would think that she went after the Hope Diamonds. Don't we have a lot bigger problems than someone touching a manatee? This seems to me like, I know you're not supposed to touch them, but is it really, with all the things we got going on in the world, is that something, even on the local news, that should be leading? I don't know. But I've seen manatees up close. We'll talk about them later.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
And as we're going to go to charts a little bit early here, we have plenty of time to answer questions. You can give me a call, 877-927-6648. That's 877-927-6648. We can take a look at them. Apple up just a little bit today, of course. It being 20% of the NASDAQ and 10% of the S&P moves these days are correlated to that. You almost always have to look at it. Volume so far very low. Of course, a lot of volume comes in late in the day on Apple, so you kind of have to wait late. But I've got about 10 million shares. Yesterday we had 22 million shares. So we're kind of trying to make a little, I think, starting to make a little ABC down here. And so could it go a little bit higher? Yeah. But probably wants to go back down to that 640 range. We had enough volume down. One of the other things is a lot of people are pumping the new mini iPad. I started seeing that today in financial infotainment. And what I would say is just be very wary about it. The one thing that people truly hate on Wall Street, whether it means making more money or not, is falling margins, because they're sure when they see falling margin, the company's falling apart. Whether it's true or not, they fire first and ask questions later. 2/3 of all the money Apple makes is from iPhones. It's not from tablets or their PCs or anything. In fact, PC is a flat business. Doesn't make them any money whatsoever, really, to speak of. The other third is from tablets right now. and I guess maybe 1 or 2% from maybe their Mac Air books and stuff. But for the most part, it really doesn't make them the kind of money that they make or anywhere close to the iPhone business. They're selling hardware that normally sells for a 50% premium. It costs them around $200. So most people will say Samsung or Sony would be glad to get $250 out of it. They're getting $650 out of it. Those kind of margins just do not last. And the first thing that people are going to say when Apple does turn, wherever it does, whether it's at $2,000, $100,000, whatever it does, at one time their margin is going to dip, and everybody's going to run for the hills. And normally the first thing where people start running for the hills is when margins start to fall, because that's one of the hard things to actually cover up in your accounting. So what's going to happen is this mini iPad's going to come out. It's a 7-inch iPad. They're going to go up against people that are willing and used to taking much smaller margins, both Amazon and Google. And we're going to see kind of a battle on the lower end. Apple can't afford to give it up. The problem with most companies is that because margins are low, they have to let other companies come back in and can't really get to the low end of the market close enough or quick enough. One reason that Intel enjoys 65% margins on its chips by average just can't really hasn't found a great way to compete with like ARMS Holdings, who does nothing more than does a design, sells that design to you, and you go off to Taiwan Semiconductor, or you go to Global Foundries, and you have them make as many as you want. You just buy that actual thing. So I would suggest that probably the fear right now, opposed to the greed in Apple, is that these new, smaller, less expensive units are going to come in, and even if they make a 7-inch tablet, how much cheaper is the bill of materials going to be? Also, they don't make the back end of the market like they do on phones, where the guys kick back a huge amount of whatever the fees are for your carrier. And of course, I think only about 10 or 15% of tablets are getting some kind of LTE or high-speed bandwidth connection other than wireless in them. I see the market now in tablets soon to be on the very low end for $119. You can get the white, what do they call it? Page white for $119, and probably the best page reader. We do have a good call coming in here, and it's Paul from Yonkers. How you doing today, Paul?
Wonderful. David, just wondered what you see in terms of oil. Was it iron-horned, so to speak, or is it just a temporary spike down?
Oil right now is started to come down as soon as the Saudis said that they were going to make sure and jump through or push through as much supply as they could. You want to hang on through the break? I guess so. Anyway, we'll be back in just a minute with Paul from Yonkers and see how it goes. Anyway, be back in a second.
Heard Tom O'Brien on the air, and you've seen him on Tiger TV as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
As we come back, hopefully we still have Paul on the line from Yonkers.
Yes.
Okay.
Dave, what is your...
Pretty much we hit that around that peak, around $100 on crude, and the Saudis came out and said, we're going to just flood the market with crude pretty much until the election. We're not going to let this thing get away. They're just, along with, especially with China and the demands in Europe drastically decreasing, there's now a lot of oil out there. And we're seeing, again, now we're probably somewhere around support on oil right here, which is, I didn't see, but it's got to be around 97, yeah. You're in your high 97s for the, I think is it December contract on crude now? But you've got, I think last quote I have here is 88.15. But, we could be coming into some probably fairly decent support if you look at both the EFTs. I'm looking at the OIH.
So, David, are you saying crude oil's been election einhorned?
It may be a little bit, but they've done that. The Saudis have pretty much done it for everybody. I guess the idea is that if the other guy wins, then it's no big deal. They'll do it for him. But, between now and then, if they don't do it, they tend to, but just about everybody they've done it to, so I'm not going to say anything, there's anything special with the Saudis. They always go with the incumbent. But pretty much, they've said that they were going to flood the market. That was when it was hitting around $100 for West Texas Intermediate, and that pretty much had it come off. Now if you look at both the OIH and oil, there was a gap up, and that gap happened right with some big volume. See, well, actually, you had a kind of a down day with 9.9 million shares, but I think that was on some contango in the contract, if I remember that day. The next day, you actually popped up, and you kind of came back. You actually had some decent volume back around the 31st. But we went up to that high. There wasn't a whole lot of energy into it, and the Saudis came out and just kind of pretty much blew it apart. So I don't see that changing much between now and the election day. They're going to keep whatever supply is on the market to probably keep it under, I would say, $95 for West Texas. So just go ahead.
Do you see it going down to 79, what it was recently, or do you?
I think that would be. I think that would be awful tough to get there. Like I said, I mean, we're at what should be some fairly just underneath this, some very strong support. If you look at the EFTs on that day, which would be support on the OIH around it's going to be the high 38s, 39, and we've got, what'd you have that day? 9.9, almost 10 million shares that day. Let's look at the OIH or OIL. I think you're probably going to. I think I saw the same thing. You didn't have quite the on it the same thing. Same thing. You've got a gap that comes down here where you had a nice little doji on the bottom that signaled the bottom on it, and that was the close on that was 21.28. I've got 21.38 as the low so far today. So I mean, we're within 20 cents of what should be a level of support. Now the volume is a little stronger today, but that's not uncommon, especially with commodities, to see at the swing points kind of false indicators. As far as I'm concerned, a lot of times you get blowouts on those days.
It's resting at support right now, where it's at now.
Yeah, when I look at both of those EFTs. Let's look at.
But how do you see the market in general, like S&P and Dow? Do you see it trending up or down?
We've had what, 2 or 3 or 4 days where they've tried to pop the market. The Treasury comes in the morning, as they have for the last 2 months, and tried to push the futures up to get commodity prices up, but they haven't been able to keep them for the last 4 days. I mean, we've sold off. So to me, that's a sign of weakness. And, right now we've got, about 2.2 billion shares, and they tried to push it back up into that high one more time. We're up, about 3.5 points on the S&P. I just don't see any juice here. I don't see any kind of impotence either. That's, is the Fed going to come out one more time and say, we're going to go QE for 500 years or something? I just don't understand anything else that can actually change the complexion. And every day we hear about more weakness in Europe and China. If we started seeing some, like they said, green shoots, that would change something. But as long as the economies in China and Europe are going down, I suspect demand for crude oil is going down. And with the Saudis adding more on, I don't see a big bump. But if we hop back down below 87 and actually go through it, let's say tomorrow on volume in the contract, on the crude oil contract, I'd say something else. But everything says we're right at support.
Right, but at the same time, I mean, the municipalities or the states, they get a lot of tax revenue from the oil. I mean, if it drops too much, they're losing revenues. So it's a catch-22 at some point that, I mean, they can't, they can't drop it to $50 a barrel because of the revenue.
Well, I think as soon as I think right today, you're probably going to see the Saudis pulling it back a little bit. All they want to do is make sure it's not going up into the election. So I think that they're more than happy to keep it somewhere between, let's say, 87 and 95 for West Texas.
Right. Okay. Absolutely. Thank you very much, David. I appreciate it.
You bet. And, we'll know tomorrow, I would imagine, because I think this thing's going to try. You had a $3.5 move today. you're going to have probably some kind of move to try to blow out that low tomorrow. So you're going to probably know in a day whether or not that's going to move. What I'm absolutely shocked about is that we could have a move like that in crude and still have the S&P up any at all today. We've got a market where they're really trying to push a very few stocks to keep the S&P higher, along with kind of a flat Dow and everything else. I don't know if we're waiting for something else I'm unaware of. Maybe traders are waiting for the debates tonight, even though that's a lie, because it isn't a debate. I've been to debates, a debate class in high school. It's nothing like that. It's I don't know what it is, but it's not debates. So we'll have that. I don't know if that's actually going to. Maybe someone could say something tonight to really move the markets. If someone makes a major gaffe out there, something would change. But as far as I'm concerned, I suspect we probably hit in the high before the election, and I'm looking at that S&P chart showing that the next place that you would really want to buy the S&P is somewhere around 1360 to 1380. So we need a good 60 point to 80 point pullback just to set up the next leg up, even if you're bullish, I think, in the S&P. If we came back on volume, of course, that would be bearish. But you know, I think I showed it yesterday in the retracements that you want to be looking at very, very tight confluence areas of previous highs and lows, and you've got one that looks very much like the kind of confluence level that truly works, and that doesn't. Hopefully, you can see this on Tiger TV, but you know, you've got a very narrow range from about 1350 to about 1360 and 1358. Normally, when those things are over a fairly decent amount of time, like a month or two, not over just a few days, that's set up. And this one actually, the ones I'm looking at, if you're just listening, if you wanted to look at the first move, it would be the focus point starts on November 21st at 1158 on November 25th. Okay, your next point comes in on June 4th at 1266, and our high at 1474 sets up a very narrow confluence range. For those not familiar with it, confluence is where two Fibonacci ranges from two different moves come back together. And that would say that you've got very, very good support back at that 1350, 1360 level as you come back into it. And if you were thinking about going long, and this thing so far to me looks like a false breakout above everything above 1422, the confirmation that that theory is correct would be us breaking 1422, coming down below it, and coming down with volume. Let's say we have a 4.5 or 5 billion share day on the consolidated New York Stock Exchange tape. I would say that that is what you're looking for to confirm a bearish move out here. You want to break, you know, we've got a high out here at 5 billion shares for that September 14th high. So is there the possibility that we actually go back and try that? I think it's probably 50-50, but I'd rather be on the short side of these things because normally you do have that one big bounce and then not a lot of volume or a lot of follow through later. It's normally a false breakout, and you know, you had that one real strong day, actually a couple of them, but it did reverse and come and close much lower that day. Probably a pretty good single. And then you start making ABC downs back into that level, which I think could take us into it. But we're close enough to the fiscal cliff. Market normally looks somewhere between 3 to 6 months ahead, normally about 6 months ahead, and I think that would take us directly into that time frame. I think where people are starting to make a bet that taxes are going to strongly go up next year, and what will happen. Everybody's saying that they'll fix it, but I suspect that there are enough people that don't want it fixed that they will be like saboteurs, and that was the original name of the workers who used to throw their wooden shoes into the gears to stop production until they got a raise. not actually what we have today, which is in a war, you blow something up, but actually to sabotage the working environment. And I suspect we probably have enough people. If you don't get 60 seats in the Senate, or enough people, probably 58, I would imagine. You probably have a couple people that could defect on the other side. You're probably going to see some kind of fiscal cliff scenario, or worse, them kick it a year down the road, which just means that our debts will pile up even higher. There was one stock that kind of caught my eye today. I wanted to go to it fairly quick. It's not one I like, and I want to warn everybody about it, but it is one of the few stocks out here actually giving some kind of buy signal. It is in an area that several people have called about over the last few days, and that's solid-state drives. If I can figure out what's going on here for some reason. And that is STEC. They had some accounting issues and got blown apart. If you look at this is the kind of gap down. But I'm like I said, don't buy this yet. It's going to take probably several months, but this is the first signal that we were seeing, or close to seeing, that we're getting close to a low. And that is not yesterday's volume, but today's volume. Their last major low was May 9th at $6.53, 3 million shares. We've got a penny below that yet today. Volume was a little more than you would like to see over the last couple of days. But you're going up against 3 million shares for that low. Last few days we've had 230, 500,000, 141,000 today. And of course we are going up against that low. That was a huge monster low on May 9th of 3 million shares. I wonder what I'm getting at. Oh, I'm picking up the previous low. Let me change my chart just a little bit here. Oh, I've gone to 2 years, that's why. Okay, that's a much better view. I like this chart. And you get your high volume low at $6.53 on May 9th. You bounce up a couple of times. You come back down. You almost get to it, $6.62 on on August 8th. 2.8 million shares. So 200,000 less shares at that low does not cut it. You know you're going to get retested. Now you've got the total lack of buying interest over these last few days, where you don't even get what's the highest day here? You get 640,000 shares. Now, that doesn't mean to go off and buy it. You want to watch for a sign of accumulation. That means this thing needs to go sideways for 5 to 10 days, and you want to see if you can watch it intraday. And if you don't have great charts for that, you can go back and look at the tape on NASDAQ's site. If you go to NASDAQ.com, you can actually pull up the intraday tape, and they'll show you the trades from that day. And you can go through and see every time it comes back down there, is there a bid, someone picking up some of that stock? But right now, there are not a lot of stocks out there that make me want to think that they've hit a bottom. This is one of the few that did. When we look at some of the other ones, I know a lot of people have been calling up about OCZ. It's been a little bit weaker also, but we're right at that, see, and it's going to come into it. Maybe it's a little bit behind. It's testing that, got one more penny to go to test that September 26th low at $3.03. So probably it's not quite ready yet, but some of these may be getting ready. Anyway, we'll be back in a moment.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Well, as we get ready to close the show out, we still have a few minutes. You can give me a call, 877-927-6648. What do we have? That's 2.3 billion shares with 1 hour to go in trading. That projects out to about 2.8 billion shares on the day. I tell you what, if you were bullish here, I suspect you probably want this market to be closed down on the lighter volume we have down today, but this is a warning signal. This is the kind of light volume we had at the end of August. This is not the kind of volume that says we're ready to make a huge move up without some kind of Fed coming out and saying we've got QE14, although I debate whether or not it would actually even matter anymore. We've got an enormous amount of stocks that I'm watching here that are trying to push back up on very, very light volume today. One of the last ones I wanted to look at here was IBM. At the end of the day, this thing's trying to push up through this $210 April 3rd high, actually 210.69. and IBM volume very, very tepid out here. I'm showing 1.7 million shares. We had 5.5 million shares just a couple of days ago. That we're coming in here with a kind of volume that just is vapor thin. Could you have a breakout tomorrow? Maybe. I suspect more likely we're going to see some kind of surprise in this market. I don't like to see highs that come through previous highs, especially like on IBM, on more volume and then pull right back into the trading range and then come up with incredibly light days, once again trying to stay over those highs. Can they continue to move over those highs? Yes, but generally you always have to know your risk reward. So is the possibility of the market going 5 points higher 80% tomorrow? Probably, but there's also that 20% where we drop 20 or 25 points on the S&P. So I'm always going to be on the side of much greater gains. You can always get out with a small loss unless you saw some kind of big sign that said everything is great and we're pushing far forward. Maybe we are waiting for the debates tonight. Maybe we're waiting for the earnings report, the employment report on Friday. I just don't see why all the volume would stop today. And I can't think that you'd wait for the for any of the things that we've seen before. The jobs numbers, I think, pretty much glued in for what they're going to be. This doesn't look like a lot of reasons to be thinking that we've got some kind of big upward movement in this market. Just look at the NASDAQ with the last minute and a half we have here today. And let's see if we can get that. We still have a problem with Dell. It's down another 4% today. We've got network appliances down 3.5%. Research in Motion off 3%. Green Mountain off 2%. Fossil off 2%. Rangel Resources off 2%. Altera Corporation off 1.6%. If you've listened to this show for a while, Altera is certainly one you want to watch, especially in the electronic industry, because it is the canary in the coal mine. When it takes a time to get back to market, that's one you want to be looking at. This one's kind of come back into a gap, and you want to see how this thing actually tries to fill this gap tomorrow. So far, not a lot of volume. It gapped up on severe volume on the July 25th on monster volume, and it's now just coming back into this. What you don't want to see is one more day of Altera coming back in. You're going to see the same thing in the SMHs. We will have a wonderful and safe day. Take it easy, especially if you watch those semi-called debates last night. Just bring the temperature down a little bit. Come in with a clear head tomorrow. See you then.